Today, Bitcoin rises to kick off the week, and after the Wall Street Journal reports that stablecoin issuer Tether is under investigation in the US, Josh Garcia of Ketsal explains the potential impacts on the stablecoin's users. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Bitcoin is on the rise to start the last week of October and hitting its highest level in 7 days. By noon Eastern, the cryptocurrency gained about 1% and traded at $68,428. Ether, meanwhile, was unchanged, dropping just 9 cents in the past 24 hours. Solana, though, falling around 1.3% to $173. Okay, let's talk about the top stories. Tether is denying that the stablecoin issuer is under investigation for breaking money laundering rules. Now, on Friday, the Wall Street Journal reported that the federal government was investigating possible violations of sanctions and anti-money laundering rules. That's according to people familiar with the matter. The Journal said federal prosecutors in Manhattan were looking into whether Tether was being used by third parties to fund illegal activities like the drug trade, terrorism, and hacking. And at the same time, the report said the Treasury Department was considering sanctioning Tether for USDT's use by sanctioned individuals and groups. Well, in a blog post that same day, Tether slammed the Wall Street Journal story, calling it, quote, irresponsible. Tether said the allegations were reckless and that the story glosses over Tether's well-documented and extensive dealings with law enforcement to crack down on bad actors. We reached out to the Southern District of New York and the Treasury Department about the story, but haven't heard back yet. Tether is facing increasing competition in the stablecoin space from the likes of Circle's USDC and traditional fintech firms like PayPal with its PYUSD stablecoin, and Stripe, which just acquired stablecoin platform Bridge. We've also seen Tether face concerns in Europe about compliance with the region's crypto regulatory framework MiCA. Coinbase told users in the EU that it would delist USDT and urged customers in the region to move to a compliant stablecoin like USDC. That's because Tether has yet to receive the required e-money license from European regulators. So this latest report from the Wall Street Journal is just the latest sign that Tether could be facing tougher scrutiny from regulators as it also faces growing competition. So for our main story, Crypto World's Jordan Smith spoke to Josh Garcia, partner at compliance and advisory firm Ketsal, about this news and what it could mean for Tether.
All right, Josh. So we had this report out from the Wall Street Journal claiming that Tether is, under investigation here in the U.S. potentially, and we had Tether come out and say that it's denying those claims. But we've sort of seen more and more scrutiny of stablecoins and potential regulation around the world as this part of the crypto industry becomes more popular. Just first, what's your reaction to this news and what it means for Tether or stablecoins in general if we are seeing more close scrutiny from the U.S.?
So my view on this is if a $3 billion fine to TD Bank doesn't shut down that whole bank, then an investigation into a global stablecoin is not going to shut down Tether. I think there's a lot of alarmist language around what this actually means. And it means, some of Tether's currency may be involved in money laundering, just like cash. May be involved in terrorist financing, and the DOJ has an obligation to go and find and root out those sources of fraud and money laundering wherever it exists. I'm not surprised that as a global stablecoin grows in popularity, it's going to get the attention of regulators who are concerned about those kinds of issues.
Yeah, I mean, you lay out two sort of different positions to take there. You've got the actual legal ramifications of this, and that may not have huge impact to Tether, but there is the narrative side of this and how people actually feel about it. And I guess I'm mostly curious about what this means for Tether and the uncertainty going forward for Tether, because it's already faced questions about its business. And you have places like Coinbase pushing European customers to competitors like USDC, saying that it's, Tether's not compliant with MiCA. Does this seem like the best time to face reports like this, or do you think that will have more of an impact than whatever fine or legal ramifications they face?
I think it's incredible, and in a good way, that we're holding an entity like Tether to the same standards that we would hold an entity like TD Bank, right? Mm-hmm. That's great for the industry, that we can look at this entity and say, look, you're doing a lot of good things, and there's a lot of completely legal things going on, but there's a portion of what you're doing that's not legal. I think that not attributing this one bad element of crypto to the whole of Tether, it like that is the challenge that we face as an industry, right? You have banks that have the patina of legitimacy just by being chartered by a state or federal agency. No crypto startup is just born from someone's mind with any kind of license attached to their name. So you have so those entities have to fight and claw for legitimacy, and this is what that fighting and clawing looks like, right? It is not a good time for Tether, but it's going to have to scramble upwards as it deals with more challenges than probably a licensed or otherwise regulated institution would.
If I can hop to a conversation around reserves, I think one of the other chief questions that Tether has faced is its reserves and whether it's over collateralized, how it's backing these stable coins. You had CEO Paolo Ardoino come out over the weekend and confirm that the issuer holds about $100 billion in U.S. Treasuries, about 5.8 in Bitcoin, and then some, billions of dollars in gold. How are you thinking about Tether's reserves right now and how it stacks up to, say, some of its competitors like Circle's USDC?
What's interesting is that competitors, they all look very much alike when you look under the hood. So PYUSD is basically a white labeled Paxos stablecoin. Circle, USDC, they have, just like PYUSDC, a tremendous amount of treasuries. There's no such thing, I think, as a fiat-backed stablecoin. Stablecoins are treasury-backed, just by their nature. So the majority of the holdings of Paxos, PYUSD, of USDC, and of Tether are US treasuries or other government treasuries, which is kind of surprising to a lot of people in crypto.
We see behind you that you're at Money 2020 right now, and I'm just curious, what the conversations around crypto have been like there, or stablecoins specifically. So since we're on that topic, we've heard this year that stablecoins are all the rage again. Is that something that you're hearing from people out in Las Vegas? What's the conversation like there?
Well, the bridge news is really dominating the conversation. A lot of people are talking about how stablecoins as a business model can make a lot of sense for traditional financial institutions, or even more edgy fintech financial institutions that have been around for a while. So it's a lot of talk about acquisitions and M&A activity. But as far as as far as the narrative goes, which is what you brought up earlier, you have a lot of people saying switch USDC from Tether because of this news. And it's a little, like, as I said, I think it's a bit alarmist to think that way, because I think every stablecoin issuer is going to come up with some regulatory issue if they get successful. So I think that this is a normal part of Tether's story. But a lot of people are seeing this as an opportunity to say, nope, Tether's going to die, switch over. But that's crypto. It's very, it moves very fast and likes to push narratives that add to the drama.
Final question to that point around regulation. You mentioned that a lot of stablecoin issuers could face regulatory pushback. There was a lot of hope that we would see stablecoin regulation here in the U.S. This year. It's looking less and less likely as we get to Election Day and potentially a new Congress coming in January. Don't quote me if it actually happens before the end of the year. But I guess, what would you want to see from stablecoin regulation in terms of reserve requirements or disclosure or protections? And do you feel like the bill before Congress right now sort of captures those requirements that you think the stablecoin industry needs?
Yeah, what I want to see from stablecoin legislation is something that helps a startup, because a lot of my clients are startups, helps a startup get its way to national or nationwide licensing without the current expense and difficulty of dealing with all 50 states. So if there's a more uniform licensing regime available to a stablecoin issuer, that would be gold or platinum standard for me.
Okay, that's all for Crypto World today. We're back again tomorrow. We'll see you then.